Right. Essar Oil is the stock in focus. We're talking about the earnings performance of Essar Oil. They've posted a loss of 71 crores versus a PAT of 105 odd crores, and this is on the back of an increasing turnover which grew by about 22 odd %. The management joins in right now. Mr. Suresh Jain, the CFO at the company, is joining us on the phone line. Mr. Jain, thanks very much for taking out the time. Could you run us through the highlights of the quarter, and also this time around what's caused this loss even with an increase in turnover of almost 22%?
Yeah, sure. Because before coming to the financial performance, let me talk about the operating performance also. You see, operating and financial performance of the company has improved during the quarter and the first half compared to the previous quarter and half year. Refinery is consistently operating above its rated capacity. Throughput during the quarter was 5.18 million metric ton, which is about 104% of its capacity. Throughput for the first half was 10.32 million metric ton. Coming to the complexity, refinery processed about 93% of heavy and ultra heavy crudes against 82% in quarter 2 of FY 12-13. Despite this heavy and ultra heavy percentage, refinery continued to produce high margin light and middle distillates, which is about 85%. Now coming to the GRM, we have reported a GRM of $6.93 a barrel, which is about 8.23 barrel higher compared to IEA benchmark, which clearly reflects that company is able to optimize both on capacity and complexity. However, coming back to the numbers, you see IEA margin during the quarter were negative. They were negative by $1.30 a barrel, mainly due to lower cracks, basically of gas oil and gasoline. And during the previous quarter, if we see, the IEA margins were negative by 0.60. So one of the reasons why, despite refinery being able to perform much higher compared to IEA benchmark, but our GRM has been impacted due to lower cracks, which is basically the lower IEA.
Are you seeing a bottoming out of the GRMs? Do you see that there could be a pickup going forward into the consecutive quarters? Because you've come off from a level of 7.6 earlier on, you've come down to about 6.93. So you see a pickup again from these levels?
You see, generally IEA margin is in the range of $1.5 to $2 positive territory. And we believe that going forward, once the IEA margins come back to the positive territory, and considering our GRM above $8 above the benchmark, we'll be able to demonstrate a better financial performance. And coming back to the revenue part, if you see the revenue during the first quarter was 19% higher, which is around 27,392 crores. And for the first time, company has crossed 50,000 crores landmark in the first half, and our revenue stood around 52,113 crores. EBITDA during the first half was 1,447 crores, and profitability during the first half and the first quarter. First half was 934 crores, which is much lower as compared to the first half of the corresponding period, and simultaneously the profit during the first quarter was 71 crores compared to the 863 crores in the previous quarter. Company has reported an operating cash profit of 347 crores during the quarter. And overall, we believe that going forward, company will be able to leverage its complexity and capacity. And with the improved GRM, we'll be able to have a better results.
So, this time around, you've exported almost 54% as compared to probably which is selling in the domestic market at higher margins. Is that something that's also impacted you?
During this quarter, our exports gone to 54%, and this is thanks to the timely and good monsoon, which is good for the country. But you see, with the good monsoon, the diesel demand has dropped substantially, and thereby during the quarter we exported substantial part of our diesel in the international market, and which has impacted our bottom line during the quarter.
Okay. Just talk a little bit more about the progress in terms of the overall capacity expansion that you are planning? Are you planning any sort of thing? And you can talk a little bit more about the performance of the Vadinar refinery and how that's shaping up.
You see, we have started both increase in the capacity, and whereby today we are at 20 MMTPA, and in terms of complexity we are 11.8. Now going forward, we would like to actually optimize the current capacity and complexity, correct our financial ratios before we embark for the next expansion.
Okay. Could you, while now in the months of November and December, that's the winter period, that's the time where you'll see higher demand for petrol and diesel coming in. Is that likely to, cover up for what you probably lost out in the month of October, and you probably see better numbers next quarter because of the diesel demand picking up?
Yeah, generally in this quarter, basically the festival season along with the winter season, the diesel demand is totally consumed out of India only, and we hardly export any barrels out of India. And with that, our exports during the quarter should come down in the range of 25 to 30%, leading to a higher gross refining margin during the current quarter on account of this domestic sales.
Got that. Mr. Jain, thanks very much for joining in. Appreciate you taking out the time. So as he pointed out, the next quarter probably we see the benefit of the domestic demand for diesel picking up, and therefore much of the domestic consumption happening at a higher margin. So that will work well. Let's take a short break on that note. We'll be right back.